Hey, what's up, everybody? Zach here. Let's go ahead and take a look at my new write-up today. Thanks for coming to my YouTube channel to follow me along the journey to $1 million, and also make sure you're subscribed to the blog. All right, let's go ahead and jump into it. Today I closed a position in iPod. Like I said before, I'm going through a raising capital period and liquidating most of my options positions because Webull needs the positions closed to get a margin account. And I just transferred over my entire portfolio from Robinhood to Webull because of the outages at Robinhood, and overall the customer's service is basically non-existent. And I'm pretty happy with Webull. I like the research, the trading charts. It's all much better than Robinhood so far. The customer service, I've heard some complaints about the Webull customer service, that people can't get in touch with them just like Robinhood. But actually, for me, I've been in touch with them multiple times already, and I've never had any problems of getting a reply. So anyways, I am closing my options positions that I had just opened last week for profit. I'm not going to be in any rush to close these positions. But if I can take a small profit and just move on for next week, and then I can reopen them next week and continue as the plan was in the first place. So, like I said, my IPOD SPAC was closed for just a small profit of, let's see, 7%, which is not good. I think my median profit is about 6 right now, about 6%, and obviously that's not very much when it comes to options. But again, I'm closing my positions, so I'm going to take pretty much anything right now. But total profit closed is so far is $555, and that's just from my last week positions since I transitioned over to Webull. And the margin on Webull is actually more expensive than Robinhood now that I think about it, because Robinhood just lowered their margin to 2.5%, and Webull, depending on your account balance, it's still going to be like 5+%, maybe. So for now, I'm going to be buying these stocks in batches of 100 shares. My plan is to sell covered calls next week. And if anybody has questions about what covered calls, please feel free to message me on Twitter, or you email me through my website. If you're subscribed to my website blog, then you will get these updates daily. What I think the best plays are, my positions, whether I close or open. But most importantly, make sure you're subscribed to my Twitter if you want to follow along for my live trading. Every day when the market opens, I'll be posting the real trades that I do. So once we buy the 100 shares, next week we'll be selling covered calls. And so far today, my portfolio is up 7.5%, which is extremely good. I think that is mostly due to the Biden inauguration. It's quite a good day. That's one of the best that I've ever had for my common stock buy and hold long-term investing portfolio. That is pretty good. And keep in mind, when I was investing in Robinhood, or should I say my portfolio was on Robinhood, I had started last March with only a little over $300,000, and I left Robinhood a couple of weeks ago, and it was up to 650. And now since I've been on Webull for a week and a half, it's really starting to take off, and I do tend to give credit to the tech stocks, pushed up by the new administration that has just come in today. All right, well, let's go ahead and get into the analysis. My first on my watch list is going to be Alibaba. Seems like good old Jack Ma has made his reappearance in China. I listened to the video, and apparently he said that he was on vacation in Sanya, which is an island that has a really nice beach in South China. But anyways, I think that this is going to be an interesting buying opportunity. If let's go ahead and take a look at this. over on the good old Webull. All right, here's Alibaba, and this is on the day candlestick chart. It all of a sudden jumped up, literally opened more than 5% than what it had closed the previous day. So I think that this could be an interesting buying opportunity because, as you can see, since Jack Ma disappeared, it's been just bleeding and bleeding. But now that he's coming back, I think that it could possibly recover. After all, you have to keep in mind that Alibaba is still the e-commerce giant in China, just like Amazon is, and this is a pretty big discount. Just to be a little bit careful because Jack Ma he obviously has a big mouth and he doesn't really know how to keep his mouth shut when dealing with the CCP, but I still think that this could possibly be a good buy. Hopefully he's okay. Don't wish any harm on Jack Ma. I hope that he comes back and tells everybody that he is fine and there is no worries. And he kind of said that in the video that he released. He said that he will talk to us later. He will see us closer to the Chinese New Year, which is coming up in only a few weeks. And that could be a big opportunity for Alibaba to jump up even more. I think that the best buy zone, and let's go ahead and jump back over here. I think that the buy zone is in this rectangle that I drew right here. I would buy Alibaba for $270 and below, and target price that we would start taking profit would be around $300. I don't think that this is a very risky play. Alibaba is still the king, and nobody is coming close in China to touching it right now. I would recommend taking some midterm options positions, possibly 2 to 4 months out. I don't think I don't think overall that's very risky. And if you have the capital, I would just buy the commons and hold it all the way up to 300 plus. At least start taking your profits at 300. Just be a little bit careful, and I think I'm going to watch this for a couple of more days before I make my final decision and see if it's going to be in the upper levels of my buy zone or the lower levels of my buy zone. But as of yesterday, the super trend has indicated that it is going to start showing us some bullish tendencies. All right, the next stock on my watch list is once again THCX. As if you've been following along, you know I really like this ETF, and currently it's not doing so bad at all. I think a good price target to buy this would be $17. In around here, I think it might bleed off a little bit more over the next couple of days, but you can always dollar average down from right now. It's at 17.91. So you could always cost average down a little bit around 18 to 17 and just see how low it goes. But overall, I'm not worried about this at all, and I don't think that it is a risky play. I think it easily can reach $21 to $25, and I would start taking profits around 21, no matter if it's midterm options or leaps options or even just holding the common stock. I think all of these are going to be good plays. It's still in an overall bullish trend. It's a decent amount over the 100-day moving average, and overall this is going to be pretty bullish. I don't see this changing anytime soon. As legalization gets closer and closer, it's just inevitable. But for me right now, I'm thinking of selling covered calls next week with this one as well. And most of the ones that I will be talking about today and for the rest of this week are going to be buying the 100 shares or more, or 200 or 300 shares to sell the covered calls for next week. And I think the time frame for THCX is probably 1 to 3 months. We can see it get up to the $21.50 or $25 levels. And I think that I would give this a risk rating of 4. And keep in mind my risk scale is 1 to 5. 1 is the least risky and 4 is the most risky. I think this is probably around a 4 because it is a smaller one and a newer ETF. than compared to some of the bigger ones like Triple Q or SPY, but still, overall it's good. And I know a lot of investors want to look for the cheaper ETFs that they can get the 100 shares. So if this one is selling for $18, let's say right now, you could get it for you can get 100 shares for $1,800. So that's not all that bad. And then and also keep in mind that this one is gaining popularity online through the stock trading communities and options communities, no matter if it's Twitter or Reddit. So I think this one could see a pump soon. But keep in mind, since this one is a smaller one, there could be a lot more volatility than with, say, like Alibaba. Then again, Alibaba was a little bit volatile the last couple of weeks. So let's go ahead and take a look at the THCX options order sheet. So right here, this is the 30 days until expiration. So we have an expiration date of February 21st. We can see if we take 1 to 3 months out, let's go ahead and switch that. So 3 months right here, just to be a little bit safer, but the further you get out, keep in mind the more expensive that these contracts are going to be. Right now we're looking at only calls. And let's see, if we take a $20, call option, and we can even settle a limit order, but let's keep it at $220, because we see the last bid was $2 and then the last ask was $225. So actually I think we can lower that a little bit more. I like to just keep it in the middle, to be honest with you. And then the last that it was actually sold for was $2.10 per contract. So if we go ahead and we could pick this up, so there's two things we could do. We could do just the regular call on this. We have about 86 days till expiration, so that gives us plenty of time to hit our $20 strike. And this contract's only going to cost us an estimated $210, because it's one contract is 100 shares. And this one, we could buy a couple of those because this is not very expensive. We could possibly see, now keep in mind, we could possibly see if it does reach our target prices, that would take us, that would take our contract to be in the money. And then we will see the exponential gains on our position. This could have a lot of upside. Another thing we could do is we could sell this call. Now, selling this call, we would need to have 100 shares of the underlying. So that's why I want to buy 100 shares of this and others right now, to get ready for next week when I want to start selling the covered calls. So right here we see, instead of paying the $2.10 per contract, we would be getting paid this amount per contract. So we would get $210 as a credit. The only thing is we would have to have 100 shares. So there's two ways that we would be able to make money on a covered call. One, the credit that we would receive of the $210. And two, if we entered this covered call, right now the current price is about $18. So we wouldn't be assigned until $20. So from $18 to $20, holding the 100 shares would still give us a $2 per share profit, and that's about 11%. So that would be our first way that we can create income and create capital gains, is if we hold the 100 shares of the underlying, and then these shares, the stock price appreciates. Now, if our strike is $20 and we get assigned, which is eventually going to happen, so don't get too attached to these stocks. be willing to sell them if the stock price reaches our underlying. So let's say we get assigned. Well, it's gone up to $20 and we're still going to make our 11%. Because we entered at 18 and then we went up to 20. And then the next way to create income would be from the credit that we get for selling this covered call at the very first day. So that would be $210 we would get no matter what. So let's say we got 100 shares at $17.91, which is the current price that cost us $1,790. And then we would be able to sell them at $20 if we get assigned. So say $20, that's $2,000 for 100 shares. So we would be able to sell for $2,000. So our profit would be $209. So that's our first way that we would make money. The second way we would make money on this position is the credit. The credit is $210. So total profit would be $419. And also keep in mind if you're selling covered calls, if the stock or the ETF has a dividend, you're still going to get that dividend. So here we go. $419, and our total investment in the first place was $1,791. So as you can see, that's a profit of around 23%. Now, there's some things to keep in mind. If the stock falls, then you're going to have to be okay with holding it until it comes back. So never do this with stocks or ETFs or whatever that you don't believe in. You have to believe in them, and still you want it to go up. Maybe you don't want to sell it, so you could sell the call at the strike price a little bit further, so maybe you won't get assigned and you still can collect a premium. And no matter what, if your 100 shares appreciates, that's all going to be capital gains. So basically that's it for selling the covered calls. That's my idea. Right now, I don't really want to do 86 days because I'm totally okay with getting assigned. I really don't mind. I want to create some extra income, a little bit less passively than what I've been doing. And I think this could be safe. I think overall this is safer than just buying the naked calls. So I think maybe I would look at 30 days to expiration because I don't want to necessarily keep this tied up for that long. And again, I'm okay with it getting assigned, and I'm also okay with owning 100 shares of THCX. And I'm not sure if I'm going to buy 100, 200, or 300, but we'll see about that. Probably 1 or 200 because I want to keep diversified and have a lot more positions. So let's look at 30 days till expiration, and let's also look at let's look at a $20, or let's look at a $19 or $20. Keep it $20. Let's sell this call. So as you can see, this is going to pay us a little bit less credit, but that is to be expected because it's shorter until expiration. But overall, it is not bad. $95 right now, and this is at the 95 cents per. So I think that we could always set a limit order. The limit price, we could set it differently, maybe $1 or something like that. But let's just keep it simple and say we got $100. Well, $100, and then if it appreciated to $20, so again, that's going to be $2,000 minus our initial buying of the 100 shares was $17.91. So that's $209 plus our $100 for getting into this position. So totally that's $309 that we could make, and that's only 30 days. And if we get assigned, then that's okay. We can buy them back, or we could start doing the wheel strategy, or some people refer to it as triple income strategy, and we could sell the puts. Wait until we collect our credit, to collect the premiums, wait till we get assigned, and then we would be we would be forced to buy the 100 shares, and then we would just go ahead and sell the covered call. So we can run that round and round and round every month, run the wheel strategy. Right now, I'm okay with just buying the 100 shares outright because I want to own this no matter what, so it's okay for me. But still, $309. It's not a bad. Percentage wise, that's 17%, and that's not guaranteed because well, only half of that is guaranteed. Actually, what is guaranteed is the credit that we're going to get for entering into this contract in the first place. But of course, it depends on if the underlying goes up or not. And if it hits our strike, we get assigned. So I think I'm more interested in maybe a 30-day here, just for selling the covered call. But if I was doing a naked, just a normal call option, I would probably do a $20 3 months to expiration. I think that would be a little bit safer. All right, let's go back to the write-up. All right, next on the list is Solo. I've also been talking a lot about this. This is a Canadian EV maker, and I want to wait for it to pull back a little bit more. Just the EV industry overall. I just want a better price, really. There's no reason to hold out. You could definitely dollar cost average your way down from here. This is a small cap stock, and it's currently trading at $7.55. So if you want to make a play next week with me to sell the covered calls, which I definitely plan to be doing, this one is even cheaper than THCX. This one I think is a little bit riskier. It's about the same, but I think this one's a little bit riskier because the EV industry is just all over the place lately. But in overall, the future is still EV, so I don't think there's anything wrong with holding 100 shares of this, and I'm certainly not in the least bit worried. I set a price target for about $11. I'll probably start taking profits at 10. I think this is going to bleed off a little bit more, but as you can see, I've actually already got my buy order for 300 shares right here because I want to start selling the covered calls. But I think anywhere in this buy zone is a good opportunity. Anywhere from 6.5, 7.5. I'm not sure how low it's going to go, but it doesn't really matter so much because if we have the 100 shares, it's not the end of the world. We don't have an expiration. This really is the safest thing to do. Next week and the week after, I'll be getting more into just the normal options contracts like I had done before when I was on Robinhood. But for now, I want to buy underlyings and sell covered calls for next week, since I cannot have the option contracts as of right now. I think time frame, we're looking at about 2 to 3 months. I really think that this could be an interesting one. And let's go ahead and take a look at the options for this. So as you can see, it's $7.55 currently. A 30-day till expiration is interesting. So if we had our 100 shares, it would only cost us $755 as of right now. So if we went ahead and did even an $8 till expiration, I know that's $8 strike price. I know that's really not very far away, and there's a very high likelihood of us getting assigned, but at least we would get a higher premium. And once we get the higher premium, we would be able to buy the 100 shares back. So I don't really see any problem with that. But if you want to hold on to this one a little bit longer, you could probably go out to about $10, and that's a decent ways off. Even if you don't mind the capital and the stocks being tied up for a couple of months, you could do my target price of 10, 11, or 12, I think would be more interesting, but you're going to get less of a premium for that. But nevertheless, let's go ahead and look into the $9 strike for 30-day expiration on Solo. As you can see, the last price that it sold for was 73 cents. So let's just go ahead and put that in. So we're going to get the credit premium of $73 if this limit order executes. So $73, and then plus our second way that we can make money on this position is if the 100 shares of our Solo appreciate. And so let's say we get assigned after 30 days. That's no big deal. We don't mind selling this one. So we're going to go ahead and go our 9 strike price minus the $7.55, which we bought the 100 shares for. So that's $1.45. And that's going to be times 100 shares. So that's $145 profit plus our credit that we got for entering into this is $73. So totally that's $218, and the total we invested was $755. So as you can see, that's around 28% profit if we get assigned, if it goes to 9. But remember, it could always go the other way. So don't get into these again if you don't want to own them. We could be holding this for 2 or 3 months. And that's not a big deal because this one is cheap and um, it's not the end of the world. I think it probably would pull back. But again, this is an EV. If NIO, Tesla, Xpeng, there's a lot. Even CAT is an interesting one that I'll probably write about tomorrow. They have a lot of autonomous vehicles and technology, and they've been doing a long time. Anyways, if the entire EV industry does just start pushing up, which it has been known to do that, if we can see the chart. In this chart, if we go over to just, for example, Xpeng, you can see the similarities. Go to Li. You can see the similarities. So my point is, once the entire electric vehicle industry starts moving, usually most of the companies and the stocks move with it. Sometimes you can have some that have a mind of their own and want to do their own thing, but usually it's going to move. So my point is, if you want to get into a cheap position, no matter if it's a naked call or selling these covered calls, this could be a good one to do it. Also remember, the smaller caps have a little bit more risk. All right, let's go ahead and move on to Print. This is really interesting. This is managed by ARK Invest, which is absolutely one of my favorite investment management companies, and they run a lot of wonderful ETFs that I have and we all have made a very good amount of money on, to say the least. Cathie Woods is one of my heroes, especially as a woman in the workplace. I think she's doing an excellent job, and she's really setting a good example for people to look up to. So since this one is managed by her and her team, I think this is a really good opportunity, especially the future of the 3D printing. This is an ETF that's going to capture that industry, and it's gaining a lot of popularity online. Real quick, my price target is around $46, which is not very high. But as far as print, I would want to get in and I want to get out. I don't want to be holding this for too long because I want to sell the covered calls. But I don't mind holding this long time. I would keep some for the longer investment. I mean, maybe more than 1 year. But if I want to invest in ARK, I would probably allocate more capital towards ARKK, ARKG, or Q, or W instead of print, because I expect this one to be a little bit more volatile. It's a little bit too niche. But with that said, I don't think that this is all that risky because it still is managed by ARK Invest. Risk score, I gave it a 3. I'd probably cut around 36 if it does go south, but I would be buying around 38, 37, 36. Remember, every time we buy, nobody knows what the price is going to be tomorrow, so we just have to try our best. So if you want to go into one of these positions with $1,000 or $500, only start buying with like 20%, because if it goes down tomorrow, you can buy it even cheaper, buy another 20%, and then if it goes down even more, you can buy another 20%. I think that would probably be the best way to do it. In the worst case scenario, if it starts going up, well, at least you got 20% of it and you're going to start making money. And there's so many different things that we can do, so many different plays that can be made. Don't feel bad if you miss one of these. That's why I really like setting limit orders, because I like getting better deals. I don't do market orders. Number one, I don't really trust Robinhood or Webull or no matter who it is. Like, I prefer to set limit orders. I don't want there's some drama going on right now. Robinhood just settled a lawsuit for that, so be a little bit careful with the market orders. Just set limit orders. It's not the end of the world. Even set a limit order for above the market price, and then it's going to get filled for the best price. You could try something like that, but I like getting good deals, so I'll set the limit order, and I'm not going to feel bad if it doesn't hit. So I'm going to try to be picking up 100 shares of this one. This one's going to be a little bit more expensive because it's trading for almost $40 right now. But nevertheless, I'm going to pick up 100. I'm going to start selling covered calls on this one. You could enter into a normal call option. I think there's no problem I think short term it can hit $43 easily. You can see some really nice gains if you had one with a shorter expiration. I'm thinking 4 to 6 weeks it can hit that. It shouldn't be a big deal because if right here we're looking at the day chart, it's already gone up from around 25, and it's already 40, and that's only since beginning of December. So I don't think there's any reason not to invest in this one, no matter if it's shorter term options, maybe 1 month to 2 months expiration, or middle term, or even leaps. Of course, the safest thing to do is just hold the common stock. All right, next on the list and last on the list is SURF. This is an oncology company that ARK has recently, last month actually, bought just a bunch of shares. And this is an ARK baby that is a clinical stage immuno-oncology company that is engaged in the development of cancer immunotherapies. So, cancer cures, no matter what, medicine, cancer, anything that has to do with helping people that has cancer. That's a wonderful thing that we can invest in. And again, this is an ARK baby, so I think that this has a very bright future. I think it's only going to be up from here, in my honest opinion. I set a price target for an upper price target of $22. I'd probably start taking profits around 18, probably ladder my way up. Or I might hold a little bit longer, but for my longer term holds, I prefer to hold ETFs just to get more diversification. It's currently is 14.09 at market close. I would buy for anything less than that. Anything 14 and below, once it pulls back, I would just buy it. Of course, it might not pull back, but again, don't feel too bad if we miss some of these opportunities, because there's literally just millions and millions of opportunities, some that will present themselves to us later. The time frame to hit about 22, I think, is around 2 to 4 months, and this one is a lower risk. I gave it a risk score of around 3.5. I don't see this one as super risky because ARK is investing in it, and just with the publicity, that's just going to push the price up. Just with that, because everybody knows ARK is one of the best ETFs to be investing. If anybody wants advice on what to buy and hold, literally just buy any ARK ETFs, and I think you're going to be good. Last year, they did 100, 140%, and that's not with doing. That's just buying it and forgetting about it. All right, let's go ahead and take a look at these options if we can. By the way, the 3D printing ETF, they don't have options on Webull. I need to look into that a little bit. But let's go ahead and look at SURF. I need to follow this one. All right. So SURF, 30-day till expiration. We could get into, we could still sell the covered calls if we could pick it up. And the current price is actually more than $13, so it's even cheaper now to own 100 shares. It's up a little bit today, but nothing to be too worried about. I still think this is a good play. This has a lot of upside potential. So, anyways, what we could do is buy 100 shares for $1,382. 30-day expiration for selling the covered call. Looks like we could get a premium if we did a 15 days. And again, this one also, I don't mind selling it. For me, I would be a little bit more sour if I had to sell just these awesome ETFs that are in my portfolio. So I don't really want to do it with that. Like the THCX and the print and the 3D printing and stuff like that, I would prefer to hold those longer. So I might do the covered calls with a further strike, like maybe 20, 22, whatever. But for these companies, I don't mind having a short strike. I'm happy taking a smaller profit than taking no profit, or having my capital tied up for just 3 months or whatever, because there's going to be so many opportunities that present themselves within 3 months. So that's just my personal preference, but you think about it. If you prefer to hold these stocks, go further out on the strike. If you don't really care, then just get your premiums and be happy about it. But so let's see for this one. If we did a $1, seems like the last price it sold for was 115. I don't, of course, when the market opens tomorrow, they're probably not going to be selling for 115. But we would just have to see that at that time and make the best decision. But again, I like to keep it in the middle of the bid and ask. So if we sold these this covered call, we get a premium of $115. So let's bring up our trusty calculator, and let's see. So, and then if the second way we would make profit would be is if the underlying went up to our strike of $15. So 15 minus currently is, just say it's 382. So that's times 100 shares. So that's $118 plus our credit premium of 115. $233, and that's not including dividends or anything like that, but let's just go with that. And because, you know, a month of dividends is not going to be very much anyways, and it might not even be a month because that expires at 30 days. You might get assigned, you know, if it went up to $15 tomorrow, we'd get assigned tomorrow, but, you know, we just have to see. So overall, that's about 16, 17%. I think that's pretty good, you know, because that's a month. And if you have a small portfolio specifically, just start collecting these premiums, holding stocks that are going to grow. So in the meantime, your portfolio is growing. These 100 stocks, 100 stocks, 100 stocks. You got 3, 4, 5 batches of different companies. You're diversified. You got 100 of each one. And then you can get some better ones, like with, I mean, better by higher premiums, like, for example, NEO, Triple Q. I mean, Triple Q is expensive. Sorry, bad example. But NEO and even Lee or Xpeng, those typically bring pretty nice premiums because they're hot online and they just have a buzz about it. Those buzzwords. But anyway, so I think this one is pretty good. You know, I will do it. I'll sell the covered calls with Surf. It's not bad. It's not a bad one. It's not my favorite, but I think that ARK is investing into it now. I think they bought 1 million shares or something like this last month, and you know, it's no joke. Print, love this ETF. I see long-term growth. This one's a little bit more expensive. Need about 4,000. Solo, you know, this is EV. Anything EV is hot. I think this is a no-brainer, and this is the cheapest one too. So if you're looking to get some tasty positions in the EV industry, that is the perfect one to start with, in my opinion. THCX, one of my favorites. I want to hold it long term. In the meantime, I'm going to sell covered calls, and I don't really want to get assigned, so I might set the strikes a little bit further out. And Alibaba, not really sure what's going to happen with this. Overall, let's just see what happens over the next couple of days. I'll keep my eye out on the Chinese internet for anything related to what's going on with Jack Ma, but you know, he looks all right as for now. So if you guys have any questions or any comments, comment on this video. I'm not very good at editing the videos, so if anybody has any tips or any software that I can use to do that, that would be appreciated. Reach out to me on my Twitter. I'm going to put a link in the description. I really love doing this, and you guys feel free to ask me any questions you want. If I have time, I will try to answer everybody's questions and everybody's comments on these YouTube videos. Please subscribe to my website and the blog, which is actually at the bottom of the website. Just put in your email address right here. I write these almost every day, especially when the markets are open, or if I just think of any, like usually I'll have a report, a weekly report, daily write-ups, stock picks, daily stock picks, and I post my trades that I'm doing on Twitter, so I do a recap in these reports. Also, if I see something else interesting, I'll write about it too. Like I just written this article about NEO, in my opinion, on the outlook in China, and just letting anybody that's invested in NEO know what's going on in the streets in China. But yeah, so put your email address here. subscribe, please. You'll get an email notification when I post any vlogs, and make sure you're subscribed to my Twitter as well. And every day when the market opens, you will be seeing me post these Webull trades. It's exactly when I'm executing the trades or limit orders, and any ideas and any news. I will be posting live on Twitter when the market opens every single day. So I really hope you guys appreciate this. And if anybody needs one of these Webull accounts, I would recommend them as a broker. It is more detailed and has a lot more tools than Robinhood. So if anybody's coming over, I totally can understand that it might be a little complicated at first. So if you can recommend to me some videos of tutorials or something like that with Webull, anything that you have a question on, really, and then I'll make a video on a how-to Webull type of videos. I personally really like Webull, and not so much Robinhood anymore. So if anybody needs a Webull account, I'm going to put a link in the description that will, if anybody signs up through my link, it supports this channel. I need a lot of support because I just started, and also you're going to get 4 free stocks right now. So please go ahead and check that out, and I really appreciate you guys tuning in, and I hope that everyone has a nice rest of the day. Stay inside, wear your mask, stay safe from the corona.